Welcome to the Deep Dive. Today, we're digging into a company that, well, certainly shook things up when it launched. Robinhood, ticker WhatHoodie.
That's right.
We're going to explore where they are right now, looking at their recent financials, the big challenges they face, their growth plans, and, what their competitive position actually looks like.
Exactly. Think of it as the key highlights, the stuff you really need to know about what's going on with Robinhood lately. It's been quite a period of change for them.
Okay, let's jump right in then. The numbers. What do the financials tell us about, say, their 2024 performance? I heard it was pretty significant.
Yeah, significant is a good word for it. What really stands out for 2024 is this dramatic turnaround financially. Robinhood actually reported a net income of $1.41 billion for the year ending December 31st, 2024.
Wow, $1.4 billion income. That's huge compared to the year before, right? Weren't they losing money?
Exactly. It's a massive swing from 2023 when they posted a net loss of $0.54 billion. So yeah, over $1.5 billion shift towards profit.
Okay, what drove that kind of transformation? That's quite a leap.
Well, a few things. A big driver was definitely strong revenue growth. Their total net revenues shot up 58%, hitting $2.95 billion in 2024. That's up from $1.87 billion the year before. So just bringing in a lot more cash.
Bringing in more?
Yeah.
And were they spending less too? Or managing costs better?
Yes, absolutely. That's the other side of the coin. On top of that revenue boost, they got noticeably more efficient. Total operating expenses actually dropped by 21%. They came in at $1.90 billion for 2024.
Okay, so more money coming in, less money going out on operations. That's the classic recipe for better profits, isn't it?
It really is. And you can see it plain as day in their operating margin. It hit 35.7% in 2024.
35.7%. And what was it before?
Well, compare that to negative 28.7% in 2023, and even worse, negative 74.4% back in 2022. So going from deep in the red to a solid positive margin like that, it shows a real improvement in how they're running the business as it scales up.
I think I saw an earnings per share number, maybe around $1.75. How does that fit with the net income?
Good question. So the official GAAP diluted EPS, that's the generally accepted accounting principles number for the year ending 31st, 2024, was $1.56.
Okay, $1.56.
Yeah. The $1.75 number you might have seen, that could be maybe a non-GAAP figure they use or perhaps an analyst's estimate looking forward.
Yeah.
But based on their official filings, the GAAP number is $1.56.
Got it. Good to know the difference there. What about other ways to look at profitability? Anything else showing that positive trend?
Yep. Adjusted EBITDA, that's earnings before interest, taxes, depreciation, amortization, and it gives another view of operational profitability that also grew significantly. It jumped 167% to $1.43 billion in 2024. That's up from about $500 million in 2023. So again, just reinforces that strong underlying profit trend.
Okay, so the bottom line definitely looks healthier. What about, the users and the money on the platform? Are people bringing more assets over, trading more?
Yes, and the operational numbers really back up that financial story. Assets under custody AUC, basically the total value of customer assets they hold, that climbed a really remarkable 88% to $192.9 billion.
Wow, nearly $200 billion.
And net deposits, so new money flowing onto the platform, that was $50.5 billion for the year, growing at a strong 49% rate.
That's serious growth in both assets and new funds. And are they making more money from each user on average?
They are. The average revenue per user, or ARPU, increased 53% to $122. That suggests they're getting better at monetizing their user base, maybe more trading, maybe more use of their other products.
Like Robinhood Gold?
Exactly. And speaking of Gold, their paid subscription service that saw an 86% jump in subscribers, they reached 2.64 million Gold members. That shows real momentum for their premium offering.
Those are all really strong signs. Engagement, assets, premium users. Okay, last thing on financials. How's the market valuing the company now based on these results? Any key ratios?
Sure. Looking at the valuation metrics available, the price to earnings, or PE ratio, is sitting around 40.45. The price to book, PB ratio, is 7.87.
Okay, a PE over 40, that usually means investors expect a lot of future growth, right?
Typically, yes. It suggests high expectations compared to current earnings. And a PB of almost 8 means the market values the company much higher than just its physical assets, probably factoring in intangibles like the brand, tech, and those growth prospects we mentioned. One note, free cash flow wasn't directly reported in the material we looked at. It was listed as none, so we don't have that specific cash generation figure from this data.
Right. So summing up the money side, 2024 was clearly a huge turnaround year. Profitability is back, driven by more revenue, better efficiency, and really impressive growth in users, assets, deposits, gold members, the works.
A very strong year on paper.
But operating in finance, especially after growing so fast, it always comes with big risks. What are the main storm clouds on the horizon for Robinhood?
And this is definitely where the picture gets a lot more nuanced. The regulatory environment is just, it's a constant, massive factor. As a financial services firm, they're subject to this web of extensive, always changing laws and rules.
Covering everything, I imagine.
Everything. Broker-dealer rules, money transmission, anti-money laundering, data privacy, crypto regulations. Now even rules around AI are emerging. And it's not just the US, they're expanding internationally. Just staying compliant is incredibly complicated and expensive.
And they've had run-ins with regulators before, haven't they? Does that history cast a shadow?
It absolutely does. The information clearly points to a history of investigations, enforcement actions, lawsuits, all stemming from past issues. Things like payment for order flow PFOF, which is a huge revenue source for them.
Right, that's how they make money on trades.
Exactly. Also issues around best execution for trades, platform outages during busy times, how they listed certain cryptocurrencies, general compliance stuff. This history means they kind of operate under a microscope, with regulators likely watching closely.
So past problems aren't really in the past, they shape the future risk.
Precisely. And some specific regulatory areas pose, direct threats to their business model. The whole debate around payment for order flow, if rules change significantly there, it could really hit their revenue.
In crypto, too.
Crypto is another big one. The rules are still very uncertain about whether cryptos are securities, and the source material specifically mentions the SEC sent a Wells notice to Robinhood Crypto.
A Wells notice.
Wow.
That's serious, right? It means the SEC might be planning to sue.
It's a formal notice that the SEC staff are recommending enforcement action. So yes, it's a very big deal, a major legal risk hanging over their crypto business.
Wow. Okay, so massive regulatory burden plus potential legal battles. What else keeps them up at night beyond regulations?
Well, the data points to several other risks. There's the worry that growth rates might slow down after this period of rapid expansion, law of large numbers. Their quarterly results can swing a lot based on just general market activity and how much new money people deposit things outside their control.
And that dependence on PFOF you mentioned.
Yes, that reliance on transaction revenues, specifically PFOF, and their relationships with the market makers who actually execute the trades. That's a concentration risk.
You also said higher interest rates helped them in 2024. So falling rates could hurt.
Correct. Their net interest revenue, the money they earn on customer cash balances, is sensitive to rate changes. If rates drop significantly, that income stream shrinks. And like any financial firm, they constantly need to manage their liquidity, make sure they have enough cash, and meet regulatory capital requirements.
They've also had some PR headaches over the years, haven't they?
Reputation risk is definitely there. Negative press, those platform outages during the meme stock frenzy, security concerns, the decision to restrict trading on certain stocks back then.
Yeah.
All that stuff impacts public trust.
Right.
So maintaining trust plus attracting and keeping talented people in a super competitive tech and finance market, those are ongoing challenges. Expanding overseas brings its own set of complexities. And of course, like any big online platform, they face constant cybersecurity threats.
And there was something about the stock structure.
Yeah, the analysis mentions their multi-class stock structure. It concentrates voting power with the founders, which some investors see as a corporate governance risk because it limits the influence of regular shareholders.
Okay, so 2024 financials looked great, but they're operating in this incredibly complex environment. Huge external risks, especially regulation and market swings that they can't fully control.
That's the balancing act, absolutely. Strong performance recently, but navigating these major external forces is the name of the game going forward.
Okay, so they prove they can make money, but they're constantly fighting these risks. How are they planning to actually push forward and grow? What's the strategy, the growth engine?
Well, their strategy, based on what we've seen, is really about sticking to that original mission, democratizing finance with tech, keeping things simple for newcomers, but, and this is key, making a really big push now to attract more active, experienced traders, too.
Ah, okay. So not just beginners anymore. How does that change what they offer? What does that product evolution look like?
It means they've moved way beyond just simple commission-free stock trading. The platform now includes options, crypto trading not just in the US, but now the EU too, plus self-custody wallets, fractional shares, recurring investments, margins, securities lending.
Lots more tools.
Yeah, and they've added a high-yield cash sweep program, which is even better for their gold subscribers. They launched retirement accounts, IRAs, with a match to encourage signups. They've got 24-hour market trading for certain stocks, joint accounts, and they're getting into more advanced stuff like event contracts and futures trading.
Futures, wow, okay. That's definitely targeting a more sophisticated audience than just buying a few shares.
It's exactly. And they're building things specifically for them, like Robinhood Legend. That's a desktop platform with more advanced charts and tools for active traders. Plus, they launched the Robinhood Gold Card, which sort of hints at maybe getting into payments or credit linked to the whole ecosystem.
Interesting. So what are the sort of big strategic goals behind adding all these different products?
It looks like it boils down to three main pillars. First goal, become the #1 platform for active traders.
Okay.
They plan to do this by adding more products these traders want, like that 24-hour trading, more asset classes like index options and futures, and just improving the tech and tools like that Legend platform.
Yeah. Makes sense.
Hmm.
Capture the series traders. What's goal number 2?
Goal 2 is to become #1 in wallet share for the next generation. Basically, they want to hold more of their customers' money and handle more of their financial needs beyond just trading.
So grow with the customer.
Pretty much.
Okay.
This is where that acquisition of Trade PMR comes in. It suggests a move towards offering wealth management or advisory services. They also want to make that gold subscription super valuable and just make it easier for people to get money onto the platform and manage their finances. It's about being there as their users' financial lives get more complex.
Right. Get them young and keep them as they get richer. And the third pillar.
Pillar 3 is building a global financial ecosystem. This means pushing harder internationally. They've got the UK brokerage now, crypto in the EU, a global wallet product, and acquisitions like the crypto exchange Bitstamp or maybe Trade PMR could help them expand into business-to-business or institutional services, maybe globally too.
It's incredibly ambitious. Global expansion, moving into wealth management, targeting pros. Are they banking on their technology to pull this off?
They definitely seem to view their tech as a core advantage. Things like their own clearing system handling trades internally, their order routing tech, running mostly on CWS cloud infrastructure. They argue this tech lets them develop new stuff quickly, operate efficiently, and manage risk better.
And are they using things like AI and crypto strategically?
Yes, absolutely.
Yeah.
They mention actively using AI internally for operations, building it into customer products, and even exploring AI-driven advice. And they see crypto and blockchain not just as something to trade, but as potentially foundational for how finance works in the future.
So the picture is pretty clear. They're definitely not just the simple free trading app anymore. They're aggressively adding features, going after beginners and pros, expanding overseas, all leaning heavily on their tech.
That's the plan. And they frame it all as being customer-focused, using feedback, offering education through things like Robinhood Learn.
Okay, we've hit the financial comeback, the heap of risks they're juggling, and these really ambitious growth plans. Let's try to tie it together by looking at their competitive strength using the 7 Power Law framework. This helps us see if they have, durable advantages like a strong moat. How does Robinhood look through that lens?
Right. The 7 Powers framework is a good way to assess how sustainable a company's edge might be. Let's go through them. They were rated 1 to 10, 10 being the strongest power or moat.
Okay, first up.
Scale Economies. Rated a 6. This is about getting cheaper costs per unit as you get bigger. The analysis suggests Robinhood does benefit here, their tech infrastructure, compliance, operations. These things get more efficient as they add users and handle more volume. Plus, their main revenue streams, like PFOF and interest, also tend to scale up well with more users and assets.
Okay, so a decent advantage from size.
Yeah.
How about network effects? Does the service get better for me if more people use it?
This one's rated pretty low, actually, too. The analysis finds very weak direct network effects in the core brokerage service. Your experience trading stocks isn't really better just because millions of others are also on Robinhood. Maybe some indirect effects from online communities talking about Robinhood, but it's not baked into the product itself in a powerful way.
Yeah, that makes sense.
Yeah.
Trading isn't really like a social network on their app. What about counter positioning? That feels like their origin story.
Oh, absolutely. And it's rated an 8. This was historically their strongest power, no coldal. Counterpositioning is when you use a business model that's hard for incumbents to copy because it messes up their existing business. Robinhood's commission-free trading was the perfect example.
But it forced the big guys to drop fees.
Exactly. And it was painful for them. Robinhood grabbed a ton of market share while the established players scrambled. The analysis notes this advantage isn't as strong now since everyone's mostly zero commission, but it was absolutely crucial for their initial rise.
So super important back then, less unique now. Okay, what about switching costs? Is it a hassle for users to leave?
Switching costs get a 5, so moderate. There is some friction, yeah. Transferring an account takes time. There might be fees, though competitors often offer to cover those, and you have to learn a new app interface. It's more of a pain if you have complex options, positions, or something. But for many users with simple stock holdings, it's not a huge barrier, and rivals actively try to make switching easy.
Okay, a bit sticky, but not locked in. How's their branding rated? They're certainly well known.
Branding also gets a 5. They definitely built a powerful, recognizable brand, especially with younger investors, linked to simplicity and access. But the analysis highlights how controversies like the GameStop situation, the outages, all the regulatory heat, that's taken toll on the brand's image and potentially trust. It doesn't quite have that deep-seated trust you might find with, say, a decades-old brokerage.
So high recognition, but maybe some baggage. What about cornered resource? Do they own something unique and essential that nobody else can get?
This is rated the lowest, just a 1. The analysis basically says there's no evidence Robinhood has exclusive access to some critical protected asset like a unique patent-protected technology, a crucial location, or irreplaceable talent that competitors simply can't match or replicate.
Right, nothing truly unique they've cornered. And the last one, process power. Are their internal ways of doing things a special advantage?
Process power gets a 4. This is about having unique internal processes that lead to lower costs or a better experience that's hard to copy. The analysis suggests their original simple mobile-first design probably had some process advantages early on. Maybe their efficiency in handling massive trade volumes linked to that PFOF system involves some unique processes too, but it's a bit unclear how unique or defensible those processes really are today.
Okay, so putting the 7 powers together. Strong historical counterposition got them in the door. They have decent scale economies now, but they're weak on network effects and cornered resource. And things like switching costs, branding, and process power are kind of moderate, maybe vulnerable.
Yeah, that's a good summary of the framework's findings. It suggests that while their entry was powerful, building those really durable long-term moats against competitors who've now adapted is the ongoing challenge.
This has been really insightful, covering a lot of ground. To just pull it all together now, what's the sort of concise takeaway on Robinhood's position right now?
Okay, the distilled version is this. Robinhood had a really strong 2024 financially. They swung back to profitability, showed really healthy growth in key things like assets on the platform, new deposits, how much they make per user, and those gold subscribers.
And that was driven by?
Mostly by higher trading activity, getting a boost from interest rates for a good chunk of the year, and importantly, managing their costs better. However, and this is crucial, the business is still really sensitive to what the overall market is doing, and it faces these significant ongoing regulatory headwinds and tough competition as it tries to push into all these new products and expand internationally.
So a successful turnaround. They prove they can make money and grow assets. But it's happening against this backdrop of constant regulatory scrutiny and fierce competition as they try to pivot into being a much broader financial services company. We saw the plan go after active traders, go global, and how their original strength was that disruption.
Yes, they're clearly working very hard to evolve beyond that initial identity.
So here's maybe a final thought for you, our listener, to chew on. Building on all this, Robinhood burst onto the scene by being the simple, zero-commission disruptor that was their counter-positioning power. Now, as they pivot hard towards more complex products, chasing sophisticated traders and going head-to-head with the big guys in areas like wealth management, you have to wonder, how does that original strength of simplicity translate? Or do they need to build entirely different moats now, maybe around tech, maybe rebuilding brand trust, maybe making it harder for people to leave? And how does that constant shadow of potential regulatory action shape this whole risky transformation?
Those really are the core questions, aren't they? Defining their path forward.
Absolutely. Well, thank you for joining us on this deep dive into Robinhood. We hope this gave you a clearer view of where this really dynamic company stands today and what it's aiming for next.